accruals versus deferrals. This is almost getting too into the weeds, very technical, terminology. I'll talk about accruals in a way that I think makes the most sense to me and in practice. I like to think of accruals as corresponding the result because of some passage of time or some obligation has been satisfied. So let's hit on accounts receivable. If you make a sale to a customer on account, you perform the service obligation, you sold the inventory to whoever, and you now have this right to receive cash later. You've performed your service, you've done your part, you've accrued this, benefit. Also with payable, you think of interest as a great example. You accrue interest throughout the year. So by the year end, you have to make an entry to say, to credit interest payable for the interest that you might pay on January 1st of the next year. So corresponds, some passage of time or some performance obligation has been satisfied before then. Deferrals, on the other hand, pretty good. It makes sense to talk about it in cash, in terms of cash being paid or collected. With unearned revenue, you are deferring the recording of revenue until you've performed the service, right? So you've received the cash now, but you are deferring any revenue, right? Deferring that when you actually go to make that entry for revenue, you're deferring it until you, only after you've done the service. Prepayments, you don't record an expense for this expenditure, whether it's supplies, rent, or insurance. The expenditure, occurs at one point in time, but the expenses follow later. So you're deferring this expense.